On CNBC-TV18, well, Lloyds Metals Energy delivered a solid set of numbers. The street is waiting for clarity on the mining capacity getting enhanced to 10 million tons from around 3 million tons. I chatted with the promoter and posed these questions to the management. Let's hear out what they had to tell us on a whole host of issues.
The penultimate step of the regulator, that is the minutes of meeting with the final presentation, has already come online of the MOEF.
Okay.
So we should expect this to happen in the next 10 to 15 days.
Okay.
That's the number one answer to your question. The ramp up would happen subsequent to that. We are already in months running up, having a run rate of around 8-9 million tons. So I think we can sustain that pre-monsoon, and also during this time we are ramping up our logistics, our takeoff points at the stockyards, at the railway yards, as well as the mining and crushing and screening capacities. So I think the next year, 23-24, we should be able to achieve 10 million tons as a total.
Okay, all right. So 10 million tons in FY24, and given that you're expecting complete go-ahead in the next couple of weeks, we got that on board. But you said you're investing some money, right, to free up the logistics, you know, whether it's with regard to storage or rakes as well. So what is the total capex that you'll be incurring to make sure this 10 million tons could move around and could move into the system? Go ahead.
The capex would be around 200 to 250 crore rupees over this period, which would include roads, road network, which normally the government should be doing, but we would be investing in that. The railway siding, the stockyard, as well as though the mining itself is a asset-light model, but we would be investing in offices and residential colonies for the staff as we grow bigger.
So all-inclusive, the total additional capex you'll be doing around 200-250 crores.
200 to 250 crores.
All right. You briefly mentioned about the cost of mining as well. Could you tell us, because that's something that makes you stand out, right? Could you tell us what is the current cost of production? And if you're including royalty, excluding it, you could give us that. Because that's where the big delta will come when iron ore prices get a little bit weak. Go ahead.
So we have around, we are advantages to the extent that we have no premiums to be paid for any of our sales. The royalty has to be paid of 19.6-20%, including what is called DMF. That comes to 700-800 rupees currently, and that's a cost which is directly linked with the selling price. Apart from that, we have a direct mining cost currently around 900 rupees. It should come down a bit once the ramp up of the capacity happens. And so that 900 plus 700 is the current cost. Some of our competitors have to pay extra premium because these are newer mines. So like that, we have been blessed, I would say, to have this advantage.
Indeed, that's where I think, you know, you'll have that a bit of an edge in comparison to competition. A couple of more questions then. Currently, all the iron ore that is, you know, taken off from your mines, what is it? What is the mix between road and rail? If you could give us a sense out there. And also, we're talking about capacity going from 3 to around 10 million tons. I'm aware of the past year, you have some inventory that's there. So you've already had a bit of a demo. But could you tell us about what is the appetite? Do you believe that it can be tied up very easily, this additional supply that will come out?
So the rake to road is around 60%, 60% by rake. The distances that we cover by road are around 350 to 400 kilometers. That works out a little bit advantageous to us and the end consumer because we don't have a siding in the mine itself. So that extra cost of transporting to the siding is saved. In terms of selling the 10 million tons, disposing of the 10 million tons, it's a short term. When I say short term, maybe medium term, up to 4-5 years till we start consuming more of this material internally. We have sold in this year around, we would be selling around 5.5 million tons. To ramp up to 10 million tons would be somewhat of a challenge maybe because we would have to go to longer distances. The demo that you talked about, we have sold material to the east coast, to the west coast, to the south. Not yet north, and not many steel plants are there in the north. So we have sold all around the country. The material has been well accepted by all our consumers.
So you don't think that it will be that big a challenge? So 5.5 million tons for this year and 10 million tons, give or take everything, is on the cards for next year.
We have tested ourselves. We are pan-India, selling everywhere, right from east, west, all corners we are selling. Plus, one of the months last quarter, we did 8 lakh tons of dispatches. That translates into 10 million tons of. So we have challenged ourselves, and we have. We should be up to them.
Got it.
And our internal consumption will also go up. Our first DRI plant is getting started in this financial year also.
Right.
The expansion, the second plant would start, the second new location would start. And also the existing plants ramp up in capacity utilization has also happened.
Okay.
So a little bit of help from that end would also be there.
Okay, interesting. Since you mentioned about the DRI plant, as you said, sir, that you'll have tested where this iron ore goes. The shareholders as well, they have been with you all for quite a while. It's been a good ride of late. But otherwise, things have been quite turbulent in the past as well. But they want to know the way ahead. What about that integrated, steel plant that everyone's talking about? That forward integration is something that people want to know about. So what is the plan? By when does a steel plant get commissioned?
So we have, you talked about rough times in the past. We are going to be very, very careful. Number one, all our capital expansion would come from internal accruals. That's our target.
No debt.
No debt. That is our very clear-cut focus, and anything that we do would be based around that.
Okay.
Having said that, the first step would be this smaller DRI plant, which is a 72,000 ton plant.
Yes.
Second step would be 2 into 4 million ton pellet plant. And third would be an integrated plant.
Okay.
The other two plants are yet, we are working out all the technical details, working out detailed financial reports, detailed feasibility reports. And also this would include a pipeline from the mine to the commissary unit where the DRI plant is already set up.
Okay.
So with all that, only after the feasibility, only after we ensure that it's up-to-date technology, and only after we ensure that the carbon footprint is within control, after all those steps, only we will start investing.
Okay.
So we'll go to the board step by step.
Okay.
And I think the integrated steel plant itself is a little way off.
Okay. So let us talk about the pellet plant then. You're talking about 2 into 4 million ton.
Yeah.
So when does that see the light of day, and what is the capex you plan for that?
So we have applied for the EC for that again, and that's at least a 6-8 month process.
Okay.
Subject to that, subject to the feasibility report, the capex plan would be around 4,000 to 4,500 crore rupees for both the plants.
And you believe that all of this will be funded by internal accruals?
We hope to, sir.
Okay, all right. Final question before we let both of you gentlemen go. The shareholding pattern. You have Sunflag out there, post that settlement. They have a convertible option. So will they be converting those 6 crore shares? Have you all heard from them? Point number one. And Mr. Gupta, you have diluted some stake, right? You have Mr. Prabhakaran that's come in there and helped in, to run the business. You don't want to sell out, right? You want to hold on to the business. Or have you heard from Mr. Prabhakaran that he wants a bigger chunk?
No, there is no question of to answer the second part. There is no question that we would be diluting our stake, that is the Gupta family, Agarwal family stake further. And we would be very much in the management of the company.
Okay.
Mr. Prabhakaran or Triveni's role is they are mining experts, and they have played a very important part in the development of the mine.
Yeah.
Our role has been since the last 30 years as steel makers.
Yeah.
And we hope to bring that in. And I think together it will be a very practical and sensible partnership to develop the company into one of the best steel companies.
To reach to that integrated steel plant, what you're talking. So the partnership has to continue, and that is what we feel should be there.
It's been good.
And if we talk about the Sunflag thing, they have a convertible option with them, which is ready for convertible from March onwards, March 15th of March. We've not yet heard from them anything as such, whether they would be converting or not converting. Currently, and what they would be converting it is the prices today are much more than
higher.
that prices. Yeah. So we keep it on to them.
Should be obvious, I guess.
I wouldn't like to comment on the other.
Okay.
So it would be there.
All right, that's some conversation with the Lloyds Metal guys. But now it's time for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today. But in case you missed it, here's the question again. What was the projected nominal GDP growth for FY23 in the last budget? Your options are 10.9%, 11.1%, 11.9%, 12.1%. Send us your answers on Twitter. Post your answer as a comment on the question tweet at CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. And hurry, send us your answers. Remember, we will announce the winner at 3 p.m. today.